Welcome to Better System Trader, the podcast to help systematic traders of all levels improve their trading. We'll give you loads of expert tips and practical advice on system design and validation, money management, trading psychology, and many other topics. Whether you're just starting out or a savvy systematic trader, we're here to help you improve your trading and find more success. This is Better System Trader with your host, Andrew Swanscott.
Hi there and welcome to Better System Trader. This is episode number 119. And in this week's Thursday Trading Thought, we're going to discuss fear, hope and greed, which are three dangers that traders of all levels need to watch out for. Otherwise, these dangers can have a dramatic impact on our trading results and can even cause traders to quit trading or to blow up their accounts. And even if you think you've got them covered, things can change pretty quickly. And even seasoned pros that are often as cool as ice can turn into a quivering mess in the corner. Okay, that was a little dramatic. But it can happen, and I'm sure you get the point that at times traders of all levels can become susceptible to the dangers of fear, hope and greed. So how can we manage them so that it doesn't impact our trading? In this episode, Brent Penfold is going to share some practical tips on how to overcome these three dangers. Plus, he mentions a fourth one at the end there as well, which I'll keep as a surprise. So let's head on over to our chat now with Brent and see what he has to share.
Within psychology, we've essentially got three key elements, maybe a fourth. Three key elements we have to understand with psychology to ensure that we can have the proper mindset when we trade. With regards to three key concepts, which is essentially hope, greed, and fear. And you find that hope, greed, and fear can be speed bumps or booby traps that can interrupt your good intentions in executing your plan according to your money management strategy and according to your methodology. Let's look at hope. Hope refers to those moments in time when you go to bed and you sort of you start to pray and you're hoping that your next trade will be a winner. So when you find that you're crossing your heart or crossing your fingers about a particular trade, then essentially you're hoping. And the reason why most people hope is because they know that if they take another loss, that's just going to really damage their account and they'll probably stop trading. And the reason why most people hope is because they have no idea about their risk of ruin. They've got no idea about expectancy. So a simple way to get rid of hope is to essentially learn about risk of ruin, get into the mathematics of risk of ruin and measure your own risk of ruin. And if it's not 0%, then do something about it to get to 0%. And that will also require you to introduce positive expectancy into your trading. Once you manage to do that, you'll stop hoping and you'll be trading with a modest expectation and you'll be trading with a positive expectancy. So you want to get rid of hope. You want to make sure hope doesn't trip you up in your good intentions to trade according to your plan. Then you have this thing called greed. Everyone suffers from it. And in trading in particular, the reason why we suffer from greed is because we're not satisfied with what we have. We want more. And in trading, if you want to make more money, our natural default position is that we trade more often. We think more trading, more money. And once again, that becomes a self-defeating spiral where you just dig yourself into a deeper and deeper hole because you're losing more money. And you think if you just trade some more aggressively and you double up, you'll make back all your losses. So before you know it, blowing up your account. The best way to combat greed is to fix up your orientation, shift your emotional orientation from wanting to be right, from wanting to make a lot of money, to change your expectation to my objective in trading is not to be right or wrong, but it's to manage my risk capital with a modest expectation. That's the key. Modest expectations. Think of yourself in 12 months' time. Think of how good you feel about yourself if you could then look over your shoulder over the previous 12 months and see how you've earned a 20 or a 25 or a 30% return on your risk capital. And just imagine how good you would feel about yourself if you could achieve that type of return. And once you feel good about that, remember how good that feels and think to yourself, that's enough. Because you have to understand, Economics 101, the more risk you take on, the more money you want to make, the more risk you have to accept, which means it's dangerous. So please to ensure that greed does not trip you up, become happy with what you have, and you do that by becoming emotionally orientated and having modest expectations. And the third main element of psychology is fear. We don't want fear to interrupt what we're doing. And fear is an important one because we can all be fearful about tomorrow and the future, and no one likes to lose money. The only way I've worked out how to combat fear, because if anyone should be fearful about the markets, it should be me, because I've got a trade going everywhere. I don't think I've ever had a day without a position somewhere long or short in the market. And the best way to overcome fear, well, I suppose the biggest concern fear has, in my opinion, is that it manifests itself in the uncertainty of tomorrow. I don't know what's going to happen tomorrow. I don't know what the Dow Jones will do tomorrow. I don't know what gold's going to do tomorrow. I don't know what soya beans are going to do tomorrow. I've got no idea whether the euro dollar will still be a currency tomorrow. That's fearful. If that's fearful, I'm not going to trade. And yet, we understand with my holy grail is opportunities times expectancy. Now, it's no good if I've got a very good positive expectancy methodology if I can't apply it to the markets against opportunities. And I won't apply it against opportunities if I'm fearful about tomorrow, if I'm fearful about the markets. I won't be trading. I won't be taking advantage of these opportunities. So it's important that we learn how to combat or remove our fear. And what I do personally is that I combat my fear by taking it head on, and I basically embrace it and I squeeze it into nothing. And the way I do it is, well, what's my fear? Well, I suppose my fear is losing money. So what I do, and what I encourage other people to do, is that before you place your trade, when you have a setup for whatever particular markets you trade, and you know how much money you're prepared to lose, debit that potential loss against your profit and loss spreadsheet before you place that trade. Okay? So debit it before you place that trade, and have a look at your account balance. And you know, that account balance right now is essentially the worst the market's going to do to you. And you look at that, and if you can live with that, you should have no fear about placing the trade, because you've taken away the sting from the market, taken away from the market that power it has over you, because you're fearful from taking another punch from the market. You know what? Well, just take the punch before you go into the ring, and then you just remove the fear of the markets, because what more can the markets do to you that you haven't already done to yourself, because you have debited your spreadsheet with your expected loss. Okay, and if you can learn to do that, I believe, well, certainly for me, it just removes the fear of trading, because I know I trade relatively small to my account balance. It's just an irritation, these individual losses that I have. It's not going to kill me. I can still trade the next day, the next month, and the next year, and I've got no fear. So that is like the third main element of psychology. Now, I have a fourth element of psychology that I think is also worth people focusing on and being aware of before you come into this thing called trading, and that is, you need to learn to endure pain. Now, it's just not pain of you losing, right? It's pain on so many different levels. You don't learn about these things until you've actually been doing it for years. But pain from trading can come from, it's almost like a virtual 360, degree, attack on what you're doing. Briefly, for example, we know there's a pain of losing. Well, we can handle that because we debit our loss before we place our trade, so that's no big deal. But there's pain on other levels, like the pain, say very simply buying a trading book because you believe that that book has some answers, and you read it and you think that's reasonable, and then you go to the pain of putting the effort into validating the ideas, and after a while, after putting your efforts in, you come to the conclusion that there's no value in the idea. It's got a negative expectancy. Straight away, there's pain and disappointment. There's pain, a pain of drawdowns, which is just the accumulation of multiple little trades. Hopefully, a long drawdown will never wipe you out, but although it does wipe out most people. But there's pain of enduring drawdowns over a period of 3, 6, 9, 12 months. That's enormous pain. It's so important to me that I think that in terms of psychology, a lot of books have been written about hope, greed, and fear. And I think it's important that we should also talk about this idea of pain. And people have to learn to endure pain on multiple levels and find out what those individual pains are so you can prepare yourself for disappointment. And that sort of rounds off the psychology.
Okay, thanks to Brent for recommending some practical tips on how traders can manage fear, hope and greed. If you'd like to hear more from Brent about that and some other important topics for traders, check out episode number 2. Well, that's it for this week's Trading Thought. Enjoy the rest of your week and I'll catch you at the next one. Ciao. Okay, well that's it for this episode. Thanks for listening. I hope you enjoyed the show. Come on over to bettersystemtrader.com. That's where you'll find all the previous episodes, all the transcribes, all the show notes and all the free weekly trading tips. bettersystemtrader.com.